You marry the home, but you date the rate. Even with rates where they are right now, now is the opportunity to buy. If you buy when the rates are a little bit high, it's okay. You can refinance and redate a lower, cuter rate when those rates drop.
It's more like marry the house and become a prisoner of forever debt. And today we're going to do a thorough analysis on whether or not the millions of realtors and loan officers who coined the phrase date the rate, marry the house, were they right, or, and there's a big or here, were they really just charlatan salespeople? Now I say that because if they were wrong, then their customers potentially just threw away their life savings and committed themselves to a type of forever debt, which is known as a mortgage. And here's the issue. There is no real rate relief in sight. In fact, the only real rate relief will probably come at a time when nationwide home prices decline, which means many of these new homeowners won't have the equity to refinance to begin with. Now, I'm going to compare the peak rates, which were back in October of 2023 at 7.79, to today's current interest rate of 6.9%, just to see how they did and to see whether or not there's any savings to begin with. Then after that segment, I'm going to go over the most recent trends and data on the housing market from Redfin, which is going to show you guys skyrocketing mortgage payments, inventory, price cuts, and DOM at the same time that demand is going down. And 22% of the top metro areas have year-over-year price decline in May. Either way, you guys, I want you to remember that real estate is about hyper-local analysis. And always use the math over your emotions and trust absolutely no one with the biggest financial investment of your life. And welcome back to Real Estate Mindset. You guys already know that this video is going to be absolutely bonkers. And happy Sunday. Now, before I begin, I want to remind you guys, it's not just realtors that were saying date the rate, marry the house. Remember this.
They're taking on the mortgage, Dave, and they're going, well, Dave, the rates are so high. What do you say to them about the rates?
You marry the house and you date the rate.
So when it does dip down,
you just refinance. It's not that hard. Just don't buy too much house and don't be crazy. But your interest rate, if interest rates go back down to 3, and I don't know if they will or not, I never thought they'd be there to start with. So what do I know? But anyway, if they do go down, it's not that big a problem.
Unfortunately, you guys, it actually is a major problem if you don't qualify. And again, one of the things that you need to qualify to refinance is something called equity, which if you're a new homeowner, you don't have. And remember this, you guys, it's not free to refinance. Generally, there's special things here and there, but generally when we count taxes, insurance, escrow, title, and lender fees, closing costs is another 4%. But I want to remind you guys one more time what these so-called professionals have been saying for the last 3 years. Back in 2023, this was from the America Mortgages. This is titled, Marry the Property, Date the Rate. Good investing? We think so, and here's why. And again, this was back in August of 2023. They've been saying this for 3 years. Other ways to deal with higher mortgage payments. The first one they're saying is interest only. So they're suggesting an interest-only loan. The problem is that you can't get an interest-only loan because it's a non-QM loan. Their other solution is right here, a 40-year mortgage. But again, this is so crazy because both of those loan programs are in violation of QM laws, and they should know that because this is America Mortgages. These products aren't even available. Yes, a 40-year mortgage is available if you do a loan modification and completely ruin your credit. But for a purchase, it's not here. These realtors are still saying these things. Take a listen to this TikTok video that was made this year somehow in 2025 and listen to her logic.
I wanted to share something with you guys, and I hope it sticks and you remember this as you're going through the process of buying your home, if that's where you are in life right now. Marry the house, date the rate.
So what does that mean? Let me tell you. You're going to find a home that you can afford right now, and you're going to marry it. You're going to lock that price in.
Because if we know anything, it's that home prices will steadily continue to increase over time. Interest rates, though, they fluctuate. You don't have to stay committed to one. When you lock in your loan, sure, date one for a little bit, but as soon as interest rates drop, you have options. You can go out there and you can date. You can refinance. You can sell your home, get a loan at a lower interest rate, and then use that money to upgrade to another house. Like, the possibilities are endless. So marry the house, date the rate. You'll be saving more money in the long run, trust me.
She's like, you'll be saving more money in the long run. Just trust me. But here's the thing, you guys, when we know how to do math, we don't have to trust anybody at all. And I'm going to tell you guys right now, she's leaving out a really, really big point. Okay. It's vital that you understand, again, that in order to refinance, you have to be able to qualify. You need decent credit, you need equity, you need to make enough money, meaning you can't have just lost your job and expect to refinance. And not only that, you guys, remember, it is extremely, extremely expensive to refinance, because when you pay a mortgage, remember, you pay the interest before you pay the principal. So if you refinance after paying for, say, 2 years, remember, all of the interest that you paid, you have to start all of that over again. Let's go into the segment now where we do a deep dive into the whole date the rate, marry the house. I'll be filling out this form right here, again, comparing October 2023 to June 2025. And there's about 7 points I want to make. But again, before I do that, let me show you how I got my data. I had to calculate interest rates. The way I did that is by going to Fred Economic Data, and I'm going to use the peak interest rate. So I'm going to give them the absolute highest interest rate, so it should have the highest value. In other words, I'm giving them the best part of this case, because again, interest rates went to 7.79 and then they dropped. So they were only at 7.79 for 1 month. But let's just act like every single person is paying a 7.79. So you guys see that right here, 7.79 in October of 2023. The current interest rate is right here at 6.89%. When it comes to a proper comparison, we have to look at the amortization schedule. We're going to start with a loan amount of $324,000. So we purchased the house in October of 2023. We purchased the house at a 7.79% interest rate. So I want you guys to pay attention. Even though we're only borrowing $324,000, we're still paying back over 30 years, $838,000. For our comparison, and to get to 2025 in June, they've been making about 18 payments. So you guys can see right here. So after 18 payments, and I want you to remember this, their current loan amount only drops to $319,683. That's an important number, because that's the loan amount that we're going to base the new closing cost on. So if this is the loan amount, $319,683, it's going to be higher once a payoff is ordered, but we're going to say it's only that. So when we pay loan officers, lenders, brokers, title insurance, escrow, and set up a new escrow account, that's going to be about 4%. So I'm going to multiply this by 4%. That means that closing costs, and this is really important to remember, it's going to cost you, just to try to save money, it's going to cost you $12,787. So I add that to the loan amount of $319,683, and I have our new refinancing loan amount of $332,470. When we put the new loan amount here of $332,470, and we refinance into today's lower interest rate of 6.89%, and let's calculate the payment. So we do get a slightly lower payment at $2,187, and now we only have to pay back a total of, and it's still a lot, $787,000. Now that you guys see how I got the math and where I got the math from, let's go over several important points about that refinance. There's the inputs on the top there. The first thing I want to point out is how much money are we going to be saving, at least out of our pocket, each month? That monthly savings is $143 a month saved out of my pocket. But here's the thing, you guys, remember, we just got done paying a whole bunch of fees. So the first thing that I want to point out is the loan amount is higher. So remember, the loan amount that we started with was $324,000. The new loan amount is $332,470,000. So your loan amount goes up by $8,470. So already understand, your loan amount generally doesn't go down. It actually goes up. Now, number two, you've just extended your loan, because remember, we're starting the 30 years all over again. We've extended the loan 1 year and 6 months, which means you have a whole bunch more payments due, as opposed to if you did not refinance. Now, the other important thing is, what were the total closing costs? Because we have to figure out how many months of saving $143 does it take to recoup only the closing costs. And this is just the upfront closing costs, which is $12,787 in closing costs. The total amount of interest that has been paid over 1 year and 6 months, and this is super disgusting, you guys, is $37,000. I want you to say this with me, $37,596 in 1 year and 6 months of just wasted interest. The total combined fees of the $12,787 and the $37,000 is a total of $50,383. To recoup closing costs, that's going to take you, okay, 89 months of saving $143. But to recoup this amount, because remember, you're starting your mortgage all over again, it is impossible. Okay? So again, I want you to understand that if you refinance, when we count the amount of interest that you wasted, it is impossible, and do the math yourself, it is impossible to recoup both the closing costs and the wasted interest, which means, number one, these realtors and these loan officers were wrong. But number two, the only benefit that people are chasing right now as far as home ownership, and we take the pride of home ownership out, is they're hoping that their equity growth is going to outpace their property taxes, which it's not, homeowners insurance, which it's not, and homeowners association, because the information I just gave you guys is not even counting your property taxes, homeowners insurance, and your HOA. If the only hope is that equity goes up and you're spending a lot more money owning versus renting, then what's the benefit at owning right now at all? When I look at my own backyard, it's in Houston, okay? So people are like, Travis, you're cherry picking. Well, I can't even talk about my own backyard. Can I even talk about my home state of Texas? Just use the math, right? Either way, look it. In Houston's not up 3 or 4% every single year. Houston's down 5.7% year over year. But you guys, even if this showed a positive, so act like that showed a positive of 3%, my property taxes are 3.52%. So the property taxes rob me of any potential equity growth, which I'm not getting to begin with. Another thing I want you guys to be aware of is these realtors and loan officer play these little trick games that, hey, if you rent right now, you're going to pay 100% in interest. Well, I would say if you buy right now and you don't refinance, because if you refinance, it's worse, you're paying 140% in interest and you're just a glorified renter to begin with. Look at the narrative that this person is trying to push. Instead of going over what I showed you, amortization schedules, how to find a house with wedge, how to find a house with cash flow, how to keep yourself safe, she's trying to guilt you into purchasing a house. She's saying that if you want to buy a house, the rates are 6 to 8%. But remember, if you get a car, which is priced, well, depending on the car, right, much lower than the house, that's 8.5. Credit cards are 7%, and rent is 100%. But she, again, this person isn't smart enough to understand that when we look at the true interest, like the reality, it's more like 140%. Let's jump into the most recent housing market update, which again is from Redfin. This came out on the 29th, titled "High Housing Costs Are Keeping Home Buyers at Bay, but Price Relief is in Sight." And they're saying that just like Zillow, because they're starting to flip on the housing market and realize all of the things that we've been saying actually matter, like income and price. Those things matter. This is also saying that the median monthly U.S. mortgage payment is just $25 shy of its record high, and that the median monthly mortgage payment nationwide is $2,860. They're stating the tide is starting to turn for home buyers. Home sale prices are already falling in 11 of the 50 most populous U.S. metro areas, and we'll go over those declines in a minute. Now, this is what their agent is saying. Let's see if their agent this week got things right. And I want you to comment below. Did they get it right this week? Sellers are realizing we're in a new market, which is making them flexible. Yeah, they're realizing that because for the last 3 years, you've been saying, no, sell for as high as possible. You're in control. A lot of sellers, especially those who may have bought at the top of the market and need to sell, are willing to accept less money for their homes, but are their lenders willing to give concession to buyers and even negotiate commissions? Buyers are more likely to be able to negotiate if a home has been on the market for more than a few weeks or if it has fallen out of contract. Let's go over their leading indicators, and I'm going to show you guys why their indicators in their methodology is broken, because again, they're saying that interest rates are down year over year from 7.16 and 6.95. And they're also saying that mortgage purchase applications, and think about this, are up 18%. And then their own methodology, Redfin Home Buying Demand Index, this is them saying it's up 7%. And the reason this is trash, at the same time, pending sales are down year over year 1.7%. And that's not even a closed transaction. That's just a transaction that is entering escrow because they have a buyer. So those aren't even closed, you guys. And that's down 1.7%. So how can they say that demand is up 7% when the actual transactions are down 1.7%? Comment below. New listings are up 3.9% year over year. That's really good. Active listings steady over 1 million now, up 11.9%. Months of supply sitting at 4 months supply. In my opinion, that is a buyer's market. The pendulum is definitely starting to swing. Median days on the market is at 36. And when we go down here for the leading losers and winners, I want to remind you guys that they're making up their own median. So it's not a true median. It's their own methodology and median combined. And we're going to use their 4-week rolling average. Now, starting with the increasing metro areas, number one is Philadelphia, up 15%, Detroit up 11.3%, Pittsburgh 10, Miami somehow up 8.1, New Brunswick up 7.8. But we have, again, 22% of the metros with year-over-year decline. California actually leading the way with Oakland down 4.9, Dallas down 4.5. Then we go into Florida with Jacksonville down 3%. Then back to Texas with Austin down 2.5. Then we go over onto the West Coast, showing Seattle down 1.4%, Tampa down 1.3. Then we have Denver, Colorado down 0.9, Atlanta, Georgia 0.8, my home metro of Houston down 0.8, Indianapolis down 0.3. This is interesting because Anaheim last year, there were several times when Anaheim led price growth. So the fact that they're on this list means that that price growth wasn't real, because they're down now 0.1%. year over year. Housing home buying payments, they're saying it's up to $2,860. But I want to remind you guys at the beginning of 2022, you can kind of see this right above my head, mortgage payments were under $1,750. So mortgage payments right now are about $1,100 to $1,200 higher in just a few years. And realtors just don't get that for some reason. The last thing I wanted to show you guys, because they no longer put that on that report, is the percent of active listings with price drops in all Redfin metro areas. We hit a brand new record. So we just hitting records after records after records of these price drops. So what do you guys think is going to happen to sales prices if we have historical price cuts? And look at the trend, you guys. The trend is skyrocketing, and it's well above seasonality. The last thing is to really hit my points home. I want to show you guys just one TikTok video of a new trend that's happening around the nation, which is especially young people. They're now living illegally, living in storage units. And I'll have an entire video made pertaining to specifically storage units, but listen to just one video.
Although I'm homeless by choice, I feel completely safe where I live. In order to get into my residence, you have to have a code. And in order to get on any floor other than the first floor in the elevator, you also have to have a code. So I don't have to worry about anyone running up on me while I'm sleeping. Now, this is my routine at night before I go do Uber. Because the business hours are from 6 a.m. to 9 p.m. and everything locks down, including the elevator, I have to set myself up to where I can get back into the unit once I'm done working. So that's what you see me doing here. I go up to my unit, I put my things away, I come back down, I set up the door to where it does not lock, and also to where no one can notice that it's open. There are other people here. I don't want to jeopardize them. I'll prop the gate open so that I can walk through, and I park my car outside.
Understand that the housing market right now is so toxic, so unaffordable from both a price and a payment standpoint, that a little rock is holding that lady's life together. If someone kicks that rock out from underneath that door, then she can't even access her home, which again, she's illegally using a storage unit. You guys, if that's not heartbreaking and if that's not sad, I don't know what is. Most of us, the way that we were raised, owning a home is part of the American dream. And they've turned that American dream into the American great liability. But either way, guys, we're going to end this one out. Don't forget, as always, go to the links in the description. We have realestatemindset.org, all kinds of free courses, free material on how the housing market works, what to look for, how to kill property taxes. Also, don't forget that I do have some shirts and coffee cups if you want them. The links are in the description. And as always, guys, I cannot do this without you. Thank you for growing, learning, and supporting Real Estate Mindset. If you guys are out there investing in real estate, your lives, whatever it is, you guys already know. I wish you luck, and I hope you win.